Okay, let's talk about the silent money drains in your life. We're going to go on a little hunt for the hidden financial leaks that can cost you an absolute fortune, often without you even realizing it's happening. Until, well, it's way too late.
This quote, man, it just hits the nail on the head, right? It's so true. We are wired to fixate on these tiny, visible costs, that 50-cent charge we can see and argue about. But what about the massive, invisible costs? The ones that are actually deciding our financial fate, a lot of the time without our permission.
$300,000. Seriously, just look at that number for a second. This is not some made-up figure we pulled out of thin air just for shock value. As you're about to see, for a lot of people, this is a very, very real potential loss from their retirement savings over their lifetime.
So that's the big question, isn't it? If this much money is just vanishing, where is it actually going? It feels like some kind of magic trick, but I promise you, it's not. It's just the result of a few powerful, invisible forces at play. So let's pull back the curtain and see who they are. We're going to break down what I call the $300,000 coffee. It's time to uncover the 3 biggest silent leaks that are draining your wealth right now. All right, our first culprit is something called the compounding fee. Now, the best way to think about this is like a silent pickpocket. It takes such a tiny amount from you each time that you literally never feel a thing. But over the years, oh yeah, it can walk away with a huge chunk of your wallet. And here it is, an annual mutual fund fee of 1.5%. Now be honest, does that seem like a big deal to you? It sounds so small, almost nothing, right? You probably wouldn't even notice it on a statement. But this little number, it's hiding a devastating secret. And this chart tells the whole story. Look at this. On the left, that's what your nest egg could look like with no fee. On the right, that's what it looks like with the fee. The gap between them isn't a crack, it's a canyon. You know why? Because that tiny fee doesn't just take 1.5% of your money, it takes 1.5% of your future growth, year after year after year after year. And here's the final result laid bare. That seemingly harmless little fee can end up eating a full quarter of your total potential wealth. A whole 25% of your retirement savings just gone. The good news is there are low-cost options out there, but you can only find them if you know you need to look for them in the first place. Okay, our second leak is even sneakier. This isn't a fee someone is charging you. Nope. This is a force that is constantly and silently melting away the value of your money. It's the invisible tax we call inflation. So what is it really? Well, to put it simply, inflation just means that over time your dollar buys less stuff. The price of everything from your groceries to gas goes up, so the power of the cash sitting in your wallet goes down. And this is so, so important to understand. Money that's just sitting still isn't safe. The cash in that low-interest savings account isn't just not growing, it's actively shrinking in what it can actually buy you. It's a guaranteed loss over time. That's why the name of the game is to own things that can grow faster than inflation is eating them away. And that brings us to our third and final leak. Now this one's different because we do this one to ourselves. It's the panic button, the incredibly high financial cost of making big decisions based on fear. You know, there's actually a formal name for this phenomenon. It's called the behavioral gap. And it's basically the difference between how an investment performs and how the investor holding it performs. So why is there a gap? Well, because our messy human emotions get in the way. Does that sound familiar? I bet it does. It's that voice of pure panic. When markets start to tumble, our gut just screams at us to sell everything, to run for safety, to stop the bleeding. But that instinct, which was great for avoiding tigers on the savannah, is just terrible for building wealth.
This timeline shows you exactly why. We feel amazing and confident buying when the market is high. Then when it crashes, fear takes over and we sell everything near the bottom, locking in those losses for good. And the worst part, we're then sitting on the sidelines when the market eventually recovers, so we miss out on all the gains. It's the perfect recipe for destroying your own wealth, when usually the most powerful action is to do nothing at all. So there you have it. We've identified the culprit. And honestly, the first and most powerful step to protecting your wealth is just learning to see these invisible forces for what they are. So let's just recap the 3 big leaks we've just uncovered. First,
You've got those compounding fees silently siphoning money from your portfolio. Second, there's inflation, the invisible tax that's devaluing your cash. And third, the panic button, where our own emotions become our own worst enemy.
But look, just knowing about this stuff is only the first step. To actually plug these leaks, you need a game plan. For compounding fees, your defense is knowledge. Go out and actively look for low-cost funds. For inflation, the defense is action. You gotta own assets that can outpace it. And for the panic button, your defense is discipline. You have to make a solid financial plan before the crisis hits so you can stick to it when your emotions are going haywire.
So I'm going to leave you with this. For years, maybe your whole life, these forces have probably been working against you in total silence. But now you know what to listen for. You can hear the hum of a high-fee fund, the whisper of inflation, and the siren song of panic. The real question is no longer about whether you can hear them. It's, what are you going to do about it now that you can?